You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for a little program I like to call around these parts Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from your home for all quality options audio, the Options Insider Radio Network. The easiest place to find it all, of course, the mothership, theoptionsinsider.com, or just search for us on all of your favorite podcast providers, your iTunes, your TuneIns, your Googs, your Pocket Cast, your so on and so forth. We're on all of them. Just type it in. You'll find us. Easy to find. You'll find all 15 shows there. Pick your poison. If you want to pick individual ones, go for it. If you want to just grab them all, make it easy for yourself, just grab the main network feed, and you'll get everything. That's our daily news show. That's Vol Views. That's Option Block. That's Advisors Option Boot Camp, and so on. Trading Tech Talk. I'm forgetting a bunch, I'm sure. Twifo. They're all in there, so you'll get your dose of free and quality options content. Rest assured, you'll have a lot to listen to. If you're bored, you got some time, go back, check out the archives. A lot of great stuff there waiting for you as well. And of course, you can always join us for the Uber Hardcore. Join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, M-I-X-L-R, where we stream this show every week. So all you guys who complain, I don't want to wait until the podcast is out, you can go get it right there. Ask us questions, hear comments, all sorts of fun stuff going on live as the show is going out. So if you're hardcore, you want to get it in your ear holes instantly, that's the place to go. And of course, you can always grab it all the time by the mobile app, available in all the big app stores. And however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We love them all. We do love to hear from you guys, despite what we say here on the show. We do like to hear from you guys. So hit us up. We read them all. We try to answer as many of them we can on the show. And if we can't get to them, we always will respond to you via email or Twitter, or however you hit us up. So keep that love coming. We love to hear from you. It's fun. All right. And joining me on the old program today, let's see. I think they're both domestic, so they may be tied right now for I'm not sure who's where, but let's just see who's close. So let's go on the left-hand side of my screen, where we are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, as well as Carmen Line, I should say. Mr. Meatball, where are you beaming in from, sir?
I am at our world headquarters in beautiful downtown Chicago, Illinois. And I'm enjoying the day here. I'm watching some some ugly snappiness and some ugliness out of the EWU. Ugliness abounds, folks.
So by your reckoning and by your list, Chicago is not one of the 10 towns that changed America, but Riverside is. That's how it works?
Well, no, there's an area in Chicago that changed America, but you understand, Chicago is just a bunch of little towns.
So Riverside, greater impact on the world than the net Chicago metropolitan.
It's the first planned suburb. You tell me what's more important, a city or the very first planned community?
There we go.
So
there's not much.
Riverside is where the idea of a suburb came from.
You say planned community, I get all sorts of terrifying notions in my head. So rather than delve into those, we'll delve into another terrifying head. I think he's back from hither and yon. He was quote unquote working out there in Hawaii, listeners, but we all know he was really hanging out with the pigeons. Mr. Russell Rhodes, the Director of Education over there at the CBOE Options Institute, working on, I think, about 45 minutes sleep, so we'll forgive you if some crazy things fly past your lips. Might be a good week to tune into the live, listeners, because who knows what the heck he's going to say. Mr. Rhodes, welcome back to the States. Welcome back to Volatility Views, sir.
I am on a 15-second delay with CBOE compliance sitting right next to me today. Because, as you said, I'm operating on very little, if no sleep, but it's the only day that I'm actually in the corner office in the whole month of June. So I had to come in.
Nothing better than alive and on the edge, Mr. Rhodes. We'll see. You never know. Tune in live. You never know what the heck's going to come flying out of his mouth. Stay tuned. Meanwhile, we're going to keep rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, the portion of the program where we break down the week that was and in many cases still is from volatility trading and trending and analysis and all sorts of fun stuff, perspective. Like I said, we're beaming it out to you and recording right around noon central here on Friday, June 9th. So still some stuff popping off in the market, even though net index-wise, a bit of a quiet day, but we'll get into some of the other things. Volatility-wise, not so much. Of course, this is Friday, so we're coming hot off the heels of kind of a bit of a 1-2 punch out there in the marketplace. First was the much-anticipated Comey testimony, and as we kind of said on the show, we kind of dismissed it last week. We kind of thought there might be a little bit of a groundswell of volatility during the conversation, during the interview, the interrogation, call it what you will, last week, and then as soon as it was done, barring some crazy bombshell, it probably would all come off again, and I don't think it even lasted throughout the entirety of his testimony, quite frankly. It started coming off fairly quickly. So once again, the market showing absolutely no reluctance to just hit a bid, any bid they can find out there in the volatility space, and crushing things pretty aggressively. We did have a bit of a reprieve as people were waiting later in the day, in the evening here in the States, for the news coming out of the UK election, and that did not turn out too well for Miss May and her team over there as well. But the combo seems to be have put pretty much all concerns behind us, at least for the near future. VIX Cash getting just slumped, I think is a technical word, coming in this morning, dipping down to a low of about, I think, 937, which is a pretty crazy low. I'll let Mr. Rhodes give us the historical context for where that falls somewhere in the great pantheon of VIX lows, but still crazy stuff, a lot of stuff popping off. It's funny, I was looking, because there are these sites overseas that will run odds of crazy things like an impeachment and things. A lot of people were looking at those, obviously, coming into the the Comey testimony. And actually, not only did Comey not inject any volatility into the marketplace yesterday, actually some of those sites have now lowered their odds of impeachment post-Comey testimony than they were going into it. So probably having a little bit of the opposite effect, maybe some people hope for, or indeed intended. But a lot of fun stuff popping off. It's been a while, so let's start with you, Mr. Rhodes. What's catching your eye this week, and where indeed does that data point of 9.37 fall on the historic pantheon of VIX numbers, sir?
VIX broke 10. Oh my God. I got to go do some work on this.
You're a few months behind on that one, sir.
I think the long-term low is 931 on the closing. I got to check on the intraday, and I'll do that.
I want to say that intraday we did get below 9 briefly once, like 896.
893.
893.
I think we've had this debate before, and that's just or a discussion. This isn't a debate.
Yeah.
But this is not a debate. I'm going to look the number up while you talk, Mark.
Yeah. So, there's a pretty famous Twitter guy that was out there saying, of the VIX occurrences, there's been 36 occurrences with VIX below 10. The last 18 have been, this year. So that means that it can't stay here. And my response was, yeah, but doesn't volatility correlate to itself? His thing was, history suggests you're a fool to think that's going to stay here. And then I said, well, volatility correlates to itself. So history says you're a fool if you don't think it stays here. So what is it? And that, I think, is the issue that I think everybody's looking at, is that, yeah, vol's low, but it could stay this low for a while. And I want to say that the last time we saw vols like this in 2006 and 7, there had not been. That was where a huge portion of the previous, 18 had been. Like 9 or 10 of them had all been in that year. So there is this, and now that VIX is more regularly traded and has lots of trade and has some thickness to it, some depth, there is a good reason for maybe volatility correlating to itself to continue to correlate to itself.
We're both wrong.
Oh, really? What is it?
Yeah. It's 889.
Oh.
So today's low was 931. Is that correct? I'm trusting you guys.
9.37.
937. Okay. That would be the 5th lowest intraday low ever. The lowest intraday low ever was on December 27th, 1993. I think that 893 number that you and I are talking about was the lowest settlement ever.
Oh, okay.
I'm going to go check that now.
All right.
I'm better at doing numbers than talking today.
Yeah, no kidding. So, but, when he gets back, I'd love to kind of get your opinion on, or let's throw you into this, Mark. I mean, so you've got on one hand, vol doesn't stay this low very long. And on the other hand, you've got the fact that vol tends to correlate to vol. So where do you fall on vol there?
We'll give a little bit of a preview of my crystal ball there. But it's funny you mentioned that, because we're going to get to that. Maybe I was going to wait till Russell's ready, but we can get into it a little bit now, actually, because a lot of people seem to have very, very differing takes on all things VIX this week. Not just us here on the show, which we always debate every week here, as my phone seems to ring for some reason. There we go. Let me turn that down here in the old studio. But yeah, we always debate every week on the crystal ball exactly what we think about coming on with VIX, and we'll get to that in a little bit. But some big houses this week having very differing opinions on all things VIX and the outlook. We'll start with Goldman. Goldman never one to shy to reveal their opinions on all things VIX. This week, it was their CIO, the Goldman Sachs Asset Management CIO, Jonathan Beiner. He was at the Bloomberg Summit, and he kind of came out and said something that I think Mark and I have been saying quite a bit on the show lately, which VIX is low, and we understand it from an empirical, and we understand the math when realized vol is anemic. VIX kind of has to be anemic by definition as well, but it seems like, given everything that's going on in the state of the world, there should be a little more to it. There should be a little bit more fluff, a little bit more vol out there in the space. And that's pretty much exactly what he said. He came out and said, we don't think these VIX low below 10 is justified, certainly not to the level where it is. It used to be that 15 was the low out there in VIX. Now you're at 10. That's basically saying the potential outcomes are a tighter band, not a wider band, and that looks pretty worrying, at least to us. He goes on to say the recent surge in populist politics, blah, 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 giant tax cuts, trade wars, etc., so on and so forth. He says this reflects what should be a wider band of potentially market-moving, market-shaking, he says, outcomes, as opposed to a narrower band. So someone who's coming in and saying, despite the math, the broader spectrum is saying maybe VIX should be a little bit higher. And then before we even debate that one, just wait a day and you get a different opinion on VIX, like the weather. Barclays coming out with almost the complete polar opposite analysis this week. They say VIX is low and it should go, or maybe could go, even lower, south of down to the 8 levels, maybe even down to as crazy as 7. They put out some earlier research that said if the VIX had been trading all the way back to the 60s, it would have traded below 10, roughly 10% of the time. So this would not be perhaps as aberrant of an occurrence as we're kind of making it out to be now, just because we have a very limited data set. It would have actually touched some lows somewhere between the 7 and 9 range. So all you people who weighed in on our poll a couple of weeks ago saying, oh, 9 is going to be the low. Well, if you historically, that would be not even close to the low. And they say going to today, they say looking at the current low levels, the VIX could possibly and quite probably could be a lot lower. And they gets into some of the wonky minutia of the VIX, as we like to do here on this show. They say, according to their notes, a lot of these deep out of the money puts are, as you like to say, quite elevated relative to the at the money vol currently. And if that starts to normalize, if that bit of convexity out there starts to normalize, then what you're going to see is VIX actually come in even further. So if these puts don't get as juicy, and granted, who knows what's going to take to make that happen. People are buying puts right now. They're concerned about these frothy valuations. I get it. That makes a lot of sense. But Barclays saying that if these puts start to come in a little bit, we could see pretty much front month around somewhere of approximately a 7, so a drop, or somewhere in the 7 handle, so a drop of about 1.5 points out there in the VIX Cash. So if you're saying, 937, whoa, that's crazy town, look out below. We could be in a 7 handle. So Mark, that's a long way around to saying there's a whole lot of differing opinion on what the hell's going on in VIX land right now. I don't know if Russell's ready, so we'll just dive back to you. Let him crank his numbers out a little bit. Maybe take a quick cat nap, too. Might be good for him. But what do you think about these two very differing takes on the VIX coming out within a day or two of each other?
I got to say that, I don't know about 7 or 7 being possible at a certain if you look at the spreads between implied volatility and realized, in order to get to 7, you would literally have to have realized volatility of 1% to 2% for several months at a time before that would occur. And I just don't see that on the horizon. That said, do I think that there is a decent chance that we could have, a sub 9 print in the near future? Sure. Could we have a lot of 9 and 10 prints? Yes. Eventually, will we see the VIX get, kind of hold itself above 15 again for a long period of time? Yeah, that's part of the deal. But like I said, I think we're in a slow period for a while here.
I know Manish and his crew over there at Barclays, they're pretty good. They speak regularly at RMC, and they always find these interesting little nuggets. I'm trying to think, we have to get him on back on the show if we haven't had him on in a while, because he's got a lot of them. We can have him talk about this exact bit of research. They always find different ways to chop up the VIX and talk about it rather than your traditional what's better, an S&P put or VIX call. Some of the usual areas of research we see, he and his team usually seem to get into other areas. That's why I thought about just the notion of the convexity and how if that just comes in a little bit. Again, that's a big if. That'd take a lot to make that come in. But if that happens, we could see look out below. Mr. Rhodes, are you back from your cat nap, sir? And what say you about these two differing poles of research about your beloved VIX Cash?
I actually, because I was on vacation this week up until today, I was reading a book about financial market history on the beach. And one of the things that I came across was that we have had much lower periods of realized volatility, and it specifically mentioned the 60s, which is kind of funny that just got brought up. And I wouldn't be the least bit surprised if we started to see this right here is why the low in the VIX is in, because I'm going to say maybe it's not. Because you always say I'm so bullish on VIX. But it's very possible that we could get an 8 handle before this whole low volatility regime is done. I mean, what else do we have hanging over the markets? You hear the crickets?
A bit of a rhetorical question.
That's the answer. Yeah.
Yeah, you're right.
I've always said that if we do have
we just
if
got
there's
past
going
two
to be
of them.
something, there's going to be something, it's going to be coming from the bond market. The bond market is what's going to cause the equity markets to tank. That's
I think
it.
it's going to be the Chinese bond market.
What's the Chinese bond market like?
Well, every time somebody defaults on something, they sweep it under the rug, and eventually there's going to be a big old lump that nobody can hide anymore.
People have been rolling out that chestnut since I think I was studying macro in college. Oh, China's on the verge of default, and a few decades later, still chirping along. That rug may be bigger than a lot of people assumed about swiping things under it, I should say. So yeah, interesting stuff. What do you guys think? Maybe we should put out another poll. I haven't had a chance to do it yet. We asked you just a couple of weeks ago. That's why we didn't want to do it again. We asked you just a couple of weeks ago what you thought the low was, and pretty much the lion's share of you said, yeah, VIX of a 9 handle is pretty much the low. A few of you saying 8, the rest of you saying, yeah, rally ho, back to the north again. Maybe this research changing your mind a little bit, or maybe it's entrenching you in your position. Let us know. Let us know what you guys think. Some of the other metrics out there, looking aside from the VIX dipping really quickly, other things kind of looking very similar to last week. We saw our old friend, the volatility of the VIX. It sounds like it's moving a little bit, but that said, it's still right on the same levels it was last week, right around an 83. So that's pretty much almost copy and paste from last week. The Skew Index also slightly more elevated than last week, but nowhere, still pretty much roughly around the norm for what that product, that index typically hovers around. The future is also still a little bit steep to the front month. It's about a 1.5 point premium out to the front month, about 2.3 or so out 2 months. Not as steep as it has been, but still maybe a little bit steeper than you might expect given where the VIX Cash is, but we've discussed this on previous week's episodes. As the VIX starts to get lower, that curve out there in the front portion of the curve really starts to get a little bit steep. It seems counterintuitive, but it is indeed the truth. All right, let's keep on rolling then. Let's see if he's got it in him. Let's see if he has it, listeners. Let's see if only about 40 minutes sleep, if he can handle finding the week's hot activity from weekly VIX options, because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I'm actually very excited to see what he can come up with on this one, because we never had one with Russell before where he's literally just gotten off the plane from reading on the beach his myriad tomes on financial history, as only he would do on the beach there. That's his idea of a vacation, listeners. But let's see. That said, let's see if he's got a nugget or two. I'll cut him down. I usually give him about 38 minutes. I'll dial him back. We'll give him about 25 minutes instead. So, Mr. Rhodes, 25 minutes, a hot mic. The floor is yours, sir. Have at it.
Mike, how about a hot mess?
I got it, Russell.
Hold on. No. First thing I wanted to say is not only was I reading about market history, but I was editing a wonderful new option-related book that will be coming out. And as payment for editing that book, Mark Sebastian is going to take it away.
All right. So there have been today a pretty big put spread, or a pretty big amount of puts that are trading in June that expires next Wednesday. This morning we saw a big buyer of the June 12 puts. Customer paid 142,000 times, 145 500 times, and then bought what amounts to close to another 2,500 puts for $1.50. Then just recently, in the last, I'm going to say 10 minutes, customer came in and traded the June 10 puts for a nickel, many of them. Now, what's interesting, there's a lot of open interest on the June 12s and the June 10s. So these could be opening or they could be closing. We saw 7,000 of the June 12s trade on the 7th for what looks like about $1.20. And then there was 7,000, and then we saw 4,500 trade for like 80, looks like around 80 cents on the 22nd. So you know, this could be a closing trade, but it looks like it's additive. You know, it'll be interesting to see what that ends up being. And then on my nickels, I'm relatively certain. So we saw the June 10s. We saw 4,700 of these go up for a nickel on June 5th. I think those are absolutely opening. It looks like a customer that was buying these for a nickel. So somebody betting that that 9 VIXs, there's a potential settle there next Wednesday. That is the biggest weekly trade I've seen today. They've all been kind of big. As I look through if there's any other interesting weeklies, the last one I see is the July 12.5s. Looks like a customer sold the 12.5s today on the July 5s at about 75 and 80 cents. So looks like a little bit of VIX income trading there in the weeklies.
Just a couple of other ones. I was poking around midweek and I had taken some notes. Early on Wednesday morning, it looks like somebody bought a little over 3,800 of the June 14th 12 puts and paid $1.15 for those. Looking really smart at this moment.
Yeah, those are the ones that they're piling on with. Yeah.
And then somebody actually sold the July 5th 14.5 calls for 74 cents and bought the July 5th 15 calls for 66 cents, taking in a whopping 8 cents. They did this 3,068 times. I love the round number.
I do like that number.
That's a pretty safe trade if you think about it.
Yeah.
It would take a true, black swan surprise event to result in that one, such as, Theresa May not winning the election.
Didn't matter.
Sorry. Yeah, I was, because I was up all night. I was monitoring the markets and reading, what was going on. I'm like, does anybody not realize that there's an election going on?
Yeah,
so,
I guess not.
And by the way, the people that did that 14.5, 15 spread, it looks like they took it off.
Good for them.
The next day, it looks like they made 3 cents. I have no idea what they were thinking.
Take your 3 cents and run. I like it. Hey,
yeah. Hey,
how funny is that? No, actually, I'm wrong. They actually put the same trade on using the July 12th options with the exact same size.
There's also actually, Russell, a couple of trades that I just sniffed out. We have looks like somebody doing something funky with a 1-point vertical at the 9.5-10 call spread. Looks like somebody bought, so the 9.5-10 call spread traded 43 cents and 44 cents. So based on, that looks like a kind of a synthetic put sale, but there's been some decent volume on these in the money calls. And it looks like, a lot of people may be doing some future supplementation. And then like you had said, there's some weird call spreads that have gone up too, but definitely some people trying to simulate the future buying calls on the 9.5s today. And a decent amount of the 10 calls trading. A lot of call sales actually. So
yeah, the weeklies
that's been interesting. A lot of June 14 today.
Weekly's starting to really light it up with a whole smattering of activity in the money, out of the money, more size than we used to see. So the weekly is really becoming the go-to product du jour. Well done, Mr. Sebastian. Looks like I like it. I think he's a little jealous. You better watch out, Mr. Rhodes. You shouldn't beam in with your 45 minutes too often, because I think Mark's angling for his own segment here. I think he wants the Meatballs weekly rundown or something along those lines. But he did well done, and a lot of good activity to highlight there. Speaking of highlighting things, if you're not following Russell during the show on Twitter, that's what the guy's doing when he's not talking. He's tweeting out every photo, every chart, some Seinfeld images I don't know how he's doing all this, but he is. And one of the ones I want to highlight, we retweeted it. You guys can follow it. CSD follow us as well. But he did put out a chart of the top 10 VIX intraday lows since 1990. So this doesn't include all those theoretical lows back in the 60s, nor would we really have the intraday. Probably just have the close. But that said, going back to 1990 and 10 of them, 10 of the lowest intraday VIX lows since 1990 have taken place in recently, including, let's see, number 10 here is June 5th, 2017 with 960. Then back to January 28, 1994 with 959. These are intraday, remember. Then number 7 there, June 2nd of this year with 958. May 9th, 956. Then back to December of 2006, December 15th, so 939. A little bit of a Christmas lull probably at work in there. And then June 9th of this year with 9.37, so that would indeed be today. Then December 1993, December 22nd, another Christmas lull. Got a couple Christmas lulls in here, 9.28. December 23rd of that same year, 9.17. Then July, so a little bit of pre-August doldrum there, 9.11. July of 1993, July 12th. And then the number one VIX intraday low, going back to 1990, another post-Christmas lull, December 27th, 1993, 8.89. That's the number Russell was alluding to earlier. So if you're wondering how today shapes up, it's pretty much right there in the top 5. So getting close there. But it's no Christmas lull. That said, Mr. Rhodes, this is your data. Any thoughts on it before we get into the old VIX mothership options activity for the week?
Yeah, the tweet was supposed to read differently, and now it's too late because you pointed it out. But it's supposed to say 10 of the lowest intraday VIX lows since 1990 4 have occurred in 2017 is what I meant to say. So doing a radio correction. And as we are speaking, CBOE TV just tweeted out me on the Rut Report. So I'm like at 2 places at once. This is amazing.
Look at you on the Rut Report.
Russell on the Rut Report, something appropriate to that. A little bit of alliteration there in the volatility space. But I did see what you were going for there with the tweet, sir, which is why I kind of amended it on the fly. I wasn't going to bring it up, but hey, I'll allow you to make your own corrections. You're a big enough man to do that, so we appreciate that. All right, moving on to a lot of weeklies were lighting it up this week. But if you think it was all weeklies, you'd be wrong. The top 10 big mothership VIX strikes out there for the week. Actually, this is top 10 overall, so there could someday. It'd be interesting if we do start seeing some weeklies in here. That'll be probably the sign when the weeklies have really arrived, when in the top 10 here, VIX strikes, we do have a weekly. We haven't really had one yet. I mean, technically, when, the monthlies get down to, getting close into the weekly realm, I guess technically you could consider that. But still, if we see like a straight up weekly that's listed and then lights it up and gets into the top 10, that would be perhaps a sign of how things have changed and evolved in the space. But for number one this week, with a bullet, once again, the June 30s, almost 340,000 contracts, number one with the bullet. Number two, this number two for the pretty much lockstep for the better part of the last month, the June 35. So if you thought 30 was a little bit crazy, take those 35s, 302,000 contracts open there. Number three, the far more relevant, far more realistic June 15s, 278,000 contracts. Number four, the June 20s, 231. So we've already fallen off about 100,000 contracts, just from number one to number four. Number five, the June 16s, 217. Number six, right the same area there, the June 19s with almost 217,000, about 216 there as well. Let me fall off a little bit again to number seven, the June 17s, 190. Number 8 is where we find the first put on the list. It is the June 11 halves. Talked about those before. They get a little bit of love these days. 185,000 of those bad boys out there. Number 9, the June 11s are hot on their heels with 179,000. And rounding out the top 10, the June 18 calls, 172,000 contracts. Certainly nothing as crazy as those puts we found out there in Tesla last week. That's leading the list out there. A total of about 9.2 million contracts open, about 7.06 on the calls, and about 2.14 million open on the puts. Before we move off of all things big VIX mothership, anything catching your eye, either Mark or Mr. Sleepy Rhodes over there, in terms of activity in the big VIX options this week?
It was a surprisingly slow week. I guess not surprisingly, but you would think with the Comey testimony we would have seen a lot more. Just a lot more of the, put versus call spread going up, and some of that stuff. The one thing I will say is there has been a marketed decrease in backspreading that has become less popular. Maybe it's because, I don't know, skew has changed and things like that. Additionally, there has been all kinds of volume on the 11.5 puts that expire in June. They've been trading back and forth left and right for a couple of days here. So that's kind of been the two things that I would say have popped out in my face.
And last week we had Ophir on, and he was talking about his VXX call spreads versus puts. We talk about VXX a lot on the show, but we don't really get into it like we do with the VIX. But I know so many of you guys love it. So many of you guys sling us. I thought we'd do a little quick analysis of that one as well. We don't really break it down as often as we probably should here on the show. So I thought we'd start with this. If you guys have, Russell probably already read the notes. He might be cheating. But if you haven't read the notes, if I was going to ask you guys right now, off the top of your head, what do you think? What would you feel is the number one with the bullets, hot strike, hot position out there, the biggest options position in VXX right now? Russell, did you cheat?
No, I did not cheat.
All right, go for it.
I'm going to guess the 1350 calls that expire today.
Interesting. Calls. Interesting. Mr. Meatball, same question for you.
I'm going to go with the puts.
The June 13 half puts?
Mm-hmm.
I think I probably would definitely lean on the put side if I had to guess on VXX, and that seems to be the number one. Close. You guys are close. June 13 put. So it wasn't as outlandish as sometimes we talk about leap puts and VXX and things. Maybe you think something like that. I was kind of wondering if one of you guys would go that far out. But yeah, number one with a bullet, the June 13 puts, 119,000 of those bad boys, followed by number two, the June 15s, 113,000. Number three, the SEP 60, all calls for the most part. A lot of more calls than you would think, actually. The SEP 16 calls, 94,000 contracts open. Number four, the June 26 calls, 71,000. Maybe someone listened to Ophir's conversation last week about selling call spreads and decided to light some up because the calls are actually doing pretty well. Then the rest of the list is pretty much all puts, including what I was thinking would be a little bit higher on the list, the Jan 2019 5 puts, someone getting into that long-term erosion play we always talk about at the set it and forget it trade. 67,000 contracts there, followed by the Jan 2018 10 put, also in a similar vein, 65,000 open there, followed by the number 7, the June 15 put, 64,000, tied with about the June 14 put, both about 64,000. Number 9, the Jan 2018 5 put, so a lot more long-term love with about 60,000. So 2018 to 2019. 2019 actually more open interest there. So people like that long-term put trade. Number 10, one more call on the list, the June 18 call with 58,000. So I don't know. I was a little surprised actually that calls were as prevalent as they are out there in VXX. Now, obviously, there's a lot of call selling out there too, but just given how we always talk about the erosion, you'd think it would be pretty much a put palooza here. But only about 4 or 5 of the strikes are what I would probably would have considered out there. Does those numbers surprise you guys at all?
I actually was shooting at the 13.5 calls because that is the 40 delta call, and that's the ones that he was talking about selling. That actually, that's why I guessed that immediately. So I wasn't terribly surprised on the call side. I think call spreads are pretty popular. Got a few questions about those from the Honolulu option traders earlier this week. There were a couple of guys that like to sell call spreads on VXX on a pretty regular basis.
Well, there you go. We'll get into that. Actually, let's get into that now. We'll get into some vol voicemail because there's not much real earnings to talk about. And crude's got a little bit of love in the vol space, but not a ton. So instead, let's get into some volatility voicemail. Maybe Russell will share some interesting anecdotes from going hot for options down there in Honolulu.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility Voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, like the man said, welcome to the Vol voicemail, the portion where you guys take the reins, crazy questions, pearls of wisdom, insights, all that fun stuff. Really quickly before we get into your questions, Mr. Rhodes, you went far and wide, ostensibly for work, this time to visit what I didn't even know existed until you went there recently, which is the Honolulu Options Traders Club. Apparently, one of the larger options trading communities in the not continental U.S., but in the U.S. nonetheless. Really quickly, any interesting nuggets from that? Any interesting questions on the vol space from all these hot HOT options traders?
Hot option traders. No, it was a good beginner and half intermediate group. They do have 350 members out there. We talked about VIX, went through VXX. A lot of interest in.
Take a look at the NDX. Holy cow!
What about the
Russell?
NDX?
The NDX is down 2%, and the Russell's up 1% at the same time.
I've got Lauren, the intern, running down to the floor to figure out what stocks are weighing on the NDX.
Apple's down 4%, Amazon's down 2%, Baba's down $1.60, Google's down 2.5%, Facebook's down 2.5%.
Wow. What happened to the FANG stocks?
I don't know, but I am going to be stepping in and buying some of these FANG stocks right now.
Go get them.
Finish your anecdote there, Russell.
What was I don't know. What were we talking about?
You're talking about your hot options traders.
3, 2, 1. Oh, yeah, the hot option traders. No, they were a great group. They actually, I know this isn't of interest to you guys, but I don't care. They actually put multiple lays on me before I started teaching, and I had to wear lays the whole time. And I think I actually tweeted that picture. Maybe I'll retweet that picture. But welcoming an expert, welcoming somebody that was spending time with them, things like that. They were a great group. They do listen to us. So I don't know if they're listening to us live right now because it's pretty early there. But they part of their homework is to listen to some of the programming here.
There you go. I love it. Welcome to all the hot options traders out there.
Yeah, there really wasn't anything outside of the ordinary that came from them. A lot of interest in being short VXX one way or another. Asking what's the difference between SVXY and VXX? Why does SVXY outperform? Those sorts of things. I'm spending more and more time on how VIX is overpriced consistently, regardless of whether it's at 11 or whether it's at 20. We had a lot of discussion around that, and that's kind of like my new work in progress. I always like, especially when I go somewhere like that far away, I like to bring something new I've been working on. I think we talked about this last week, and I wrote it up in my blog over the weekend as well. But just talking about how how selling volatility at 12 and selling volatility at 20, it's actually easier at 12 more often than not than it is at 20. And I spent some time on that.
That's an interesting point. It's always very counterintuitive whenever we bring that up for people. They used to push back on it a lot more. I think now that we've been in this prolonged period of lower volatility and there's so much short vol trading out there, the quote unquote feedback loop that I think it was the Journal or Bloomberg was talking about recently, everyone's got that on their brain now. So they start to realize why that trade makes sense. But if we brought that up a year or two ago on this program, we got a lot of pushback about, that makes no sense. It's counterintuitive to the VIX, et cetera, et cetera. It is interesting that one of the larger clubs would be in Honolulu. Maybe there's, I don't know why that is. It probably wouldn't be my first guess for where the big clubs would be. Maybe there's a big overlap of option sensibility with the Polynesian mindset and culture. Maybe there's just a lot of retirees there who want to sling some options. Maybe a combo of both. I don't know, but it would not be my first guess for where the biggest options club in the U.S. would be. Interesting stuff. Speaking of interesting stuff, we asked you guys today. We like to ask you guys questions in this segment as well. We asked you guys today, hey, looks like VIX kind of giving up the ghost here. So all you guys who are wringing your hands saying, wither the vol, where can I find some vol? Where are you looking now for your volatility? What products are you hoping will provide new sources of volatility for your options trading? We gave you 4 choices. We said, is it going to be crude? So your WTIs and your Brents, that sort of thing. Maybe the metals, so your GLDs, your SLVs, maybe the big futures option, somewhere in between. Maybe, given today's events, we put FX in there as well. Maybe some pound dollar, maybe some Euro USD, maybe something else that floats your boat. vote, or you're going to go the individual equities route. So your crazies, your Teslas, and everything else that's always pumping out vol on a regular basis. It's only been up for a little while. It's only going to run today. It's the short one, listeners. So if you don't get in, if you haven't, I think by the time you listen to the recording, maybe too late. So get in if you're listening live and make your votes heard. Mr. Rhodes, we'll start with you while Mr. Meatball's buying his FANG stocks there. What is your vote, and what do you think is winning our poll?
What were my choices again? I was running a number.
You're always running a number. Crude, metals, FX, or individual equities?
Do what?
Crude, metals, FX, or individual equities?
Crude.
Interesting. Mr. Meatball, what are you feeling, sir?
Going with crude. He's trading.
Mr. Meatball, you there?
Yeah. What about crude?
What's your
gone
pick?
lower. It's gone lower,
It's
and
gone
Vol's.
You're hearing Carmen Line in action, sir. Mr. Meatball, if you had to guess what people think is going to be the new source of volatility for them, is it going to be crude? Is it going to be metals? Is it going to be FX or individual equities, sir?
I think this is Russell
equity.
again, and actually, I think crude because of geopolitical. I just think sooner rather than later, something really bad's going to happen in the world.
One vote for crude, one vote for FX. I'm already looking at the numbers, so I can't vote. I've been poisoned, even though I probably would lean on the individual equities route, and that is kind of what our listeners at least seem to be leaning with so far. Once you put Tesla in something, people vote for it. So yeah, that's got about 40%. The rest are split fairly evenly. 20% for crude, 20% for metals, 20% for FX. So we'll see how that shakes out. It's got a few hours left for you guys to vote if you haven't done so already here. Let's see what else we got here. We got a comment here from John King, longtime listener. He says, "Oh, this is coming in. I think this came in yesterday after the Comey stuff." He said, "This hashtag fired, hashtag FBI director completes revised hashtag testimony, a negative for sitting hashtag president." A lot of hashtags. And hashtag VIX down half a buck, roughly half a point to 9.98. Just plain crazy. I think we're with you. We discussed this at the top of the show. It is it's getting to that point now where it's starting to be a little bit polarizing. There's a little bit of a schism there. Like we mentioned even this week, big banks. Goldman says it should be higher. Barclays says it probably could go lower. So it's getting to that schism point where people are starting to break down on either side. I think we're with you, though. It does feel crazy, and yet the math doesn't lie. If realized vol is still anemic, there's only so high VIX can go. So yeah, I'm with you. I feel like there should be more. Feels like there should be more stuff going on, and yet the math is inescapable. It does not lie, and so unfortunately we cannot lie either. Let's see here. I'm going to hold off on this one because I don't think either of you guys I haven't had a chance to read this article yet. I know Russell hasn't. You guys like sending us links. We like to read your article first before we comment on this. We're talking here. This is from Ag Trader, another comment. He says, we talked before about VIX, a lot of short positions out there and all the large short interest in VIX-based ETFs. He writes, God help them when they all have to cover all at once. Yeah, there's something to that. We mentioned that before when we were kind of debating that volatility feedback loop article, that this trade is good until it isn't. And when it's not, it blows up in your face pretty freaking quick. So, yeah, it's gonna be interesting to watch that, Mr. Ag Trader, when all these funds who have kind of come to the dark side now and discovered the short vol trade, when they all collectively have to get the heck out of Dodge. I think, as that feedback loop article kind of mentioned, maybe when that happens, the stampede to the exits may indeed exacerbate an already crazy, VIX is known to outperform to the upside already. When these things happen, they happen big. That's why people trade it, and that's why people love to buy those VIX calls. And we'll see if perhaps all this preponderance of short interest may indeed exacerbate that, when indeed the time comes, because it will come. It's just a question of when that happens, but I'm with you on that. Let's see what else we got here. Here we go. The VIG. I like this handle. The VIG. He asked, and this I think is in reference to what Ophir was talking about last week. I don't get why I should want to sell calls in VXX instead of just buying puts. Are the returns that much better than buying puts to be worth the extra risk? I asked Ophir that exact question last week. I asked him, I said, hey, how does this compare? Because the trade we know is buying the puts, and we know how well that performs. We know it's a real fairly low risk profile type trade, so why should we add this extra layer of risk? And he started breaking it down in his back tester. Then I think we got distracted with other stuff. So I don't know if he actually gave us the answer. His back tester is the way to see it, so we'll have to look and see. It's got to be comparable if he's out there talking about it. But I'll have to ask him to get the exact number. I don't know, Mr. Rhodes. Have you had a week to digest it now? What do you think about that strategy of selling, calls or call spreads in VXX versus the kind of old standby of buying the puts? And at least you kind of know what you get with the latter. With the former, you're playing a little bit with more fire.
Well, the issue with what he was doing was, remember, he was selling the 40 delta call and buying a 15 delta call. Which I followed up a lot on what he was doing and kind of did my own research on it, and may have even followed it with a trade, just to pay a little bit more attention to it. Now, one of the issues that you can have with one of these, with being short VXX over a very short period of time, is you get one volatility spike and you're in trouble. If you get a volatility spike when you're long a put and you've bought a put that also has some time value to it, you're less likely to make it up in a very short period of time. Whereas if you've got this slightly out of the money call spread and you get some sort of move up in VXX, it's possible that the spread still stays a little bit out of the money. If we had higher implied vol of VXX options because everybody was anticipating some sort of a move, that's actually going to push you farther out on the call spread. So there are lots of lots of factors that come into play that favor the call spread as opposed to just outright buying a put. The other side of that, and something I tried to break in when we were talking about this last week, and we kind of ran out of time, I think a really good strategy, if you're thinking about buying the puts, is for the longer term, where you get that constant drift lower. And I actually learned this one from Mark Sebastian. Buying a 9 to 12 month VXX put, where you grind lower. If you get a spike or two, it doesn't hurt you too much, and you've got enough time for us to revert back to the very continuous downtrend. So I think the call spreads work for short-term trades like he was talking about, and the buying puts is better for a longer-term trade.
Mr. Meatball, your thoughts as well. Call me crazy, but I got the feeling you weren't buying exactly what Ophir was selling last week on the call spreads.
No, I think call spreads are great. I actually, my fund runs a call spread selling strategy. The advantage of call spreads is that you can set them at a level where you don't think vol is going to get to. So there is a safety valve there that doesn't exist with the puts. The puts are kind of a more de facto way of just being kind of a net short of future. You get a lot more exposure and a lot more gamma. So whereas a call spread, as time passes, it kind of loses its price exposure, and as the underlying drops, it loses its price exposure. The puts gain that price exposure. So I think for an individual or for a trader, that VIX or VXX or VIX calls puts make a lot more sense. But if you're running something systematic or you want something that's kind of a hands-off, let me relax type trade, call spreads are way better. And that's actually why my fund does primarily trades on the call side as opposed to within puts.
So you think call spreads are actually more hands off than the puts?
Oh, I do, unless they make that move. And guys, can we talk about this move that's going on right now?
This is pretty crazy.
This is amazing. The NASDAQ is down 2%, while the Russell 2000 is up almost 1%, and the S&P is unchanged. Apple is currently down 4%, or now 3%. Amazon is down 2%. Google is down 2.5%. Facebook is down 2%. Somebody just came and just pushed the sell button on all of your GAF stocks.
Yeah, this is crazy. We'll get into it right now then in the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Like Mark said, this recent sell-off has given a little bit of life back to the VIX Cash. It's almost a full point, a full handle higher than the lows it hit this morning. It hit 9.37 earlier this morning. Right now, right around 10.25 right now, so nearly a full handle higher. That means this late surge, if I hadn't known better, I'd almost guess it was Mr. Russell moving some stuff around to make his pick come back to life. Actually, technically, given says 10.25. Actually, Ophir, our guest, would be the winner. He was at 10, so he's the closest without going over. But Mr. Rhodes always willing to go over. He was at 10.60. So given the fact that he's the closest one, I was actually at 9.75. So we're actually pretty close to each other. But I'll give it to Mr. Rhodes. Technically, he is a wee bit closer. So Mr. Rhodes, you don't get to win very often. What are you feeling? And what are you feeling about this move? And how does it maybe impact your pick for next week?
VXN is up, and I know this is going to drive Mark crazy, over 10% right now. That is the CBOE NASDAQ Volatility Index.
VXN. I think the more important...
talked about that while you were trading.
I know. I think the more important thing is that VXN is now 15, which is some real teeth, and the VIX is 10.5. So that's a nice 4.5 point spread there.
If we keep talking, I'm going to win this thing, because VIX just popped to 10.60.
Yeah, it's 10.50, 10.56. Yeah, I mean, it's moving. You got a good move in VIX. I'll tell you, here, just my gut says buy all of these. And I think that any trade, any purchase now is going to look very, very good Monday afternoon. That's just my gut. But obviously, I could be wrong.
So, Mr. Rhodes, what are you feeling for your number next week, sir?
My number for next week, it will be 11.23. The bottom is in.
He's calling it. This is the turn, huh?
Yeah!
This is the turn. You know, how many of these head fakes have we had now? Granted, it is a little bit of a surprise one going into a weekend like this. I don't think a lot of people called it. Maybe if they did, they called it earlier in the week, not today. Given that everything is now behind us, it is kind of odd. So we'll have to dig into a little bit of what's driving this, aside from some rogue algo, like Mark said, hitting the sell button on everything right now. But aside from that, yeah, I'm not. I don't know if I'm buying exactly what this. We're right about 10:30 odd right now, and I'm not really buying this near-term love. So I think we're going to drift a little bit back lower. I like where I was this week for next week as well. I'm going to go stay at 9.75. So a nice gulf here. A nice 1.5 gulf between me and Mr. Rhodes. A lot of room for you to work with. Mr. Meatball, what are you feeling?
You're 9.5, you said?
9.75.
9.75, and Russell is 11.5?
11.23.
11.23. I think that we're going to end up about where we are here, which is about 10.5. Mostly because that would be bad for my position. So I'm going to put my money where my position is, and I'll say, we're going to be 10.5.
There you go, 10.5. A rear, actually not higher, but at the money, stay here pick from Mr. Meatball. Always picking against himself. Gotta love that. Gary talking up what his book is. There, it gives you some insight into what he's got going on. Unfortunately, we got nothing else going on. We're done. I gotta get rolling on to TWIFO soon, listeners. So if you're in the chat room, join us again in about half an hour. We'll come at you with all the fun stuff going on the commodity side of the space. So, of course, your crudes, I think a little bit of metals, maybe some FX maybe in store this week, as well as some crazy trades, hot products, who's paying the rent, guest star, all kinds of fun stuff coming your way half an hour. Stay tuned for that. But before we go, let me go back around the horn to see if Mr. Rhodes really quickly, if he hasn't fallen asleep yet. One last duty, sir, then you can sleep. What is coming down the pike in the realm of all things CBOE and live ball?
I am on a flight at 9 a.m. tomorrow to London. Going to go visit the CBOE BATS Europe office for 3 days. And then I'm going to go do something with Saxo Bank for a couple of days, do an option event along with our friends from the CME group. So you can see if anybody on the next show is going to be over there in Copenhagen with me.
I will ask them that. Our friends on CME coming up on the next show. You are correct. And you're right. No rest for the literal wicked. Mr. Rhodes lands and he got to go right back off again. So I don't envy your travel schedule, sir. That said, Mr. Meatball, as the fingers are flying, as Carmen Line is buying all these Fang names, what is coming down the week for Carmen Line and indeed for Option Pit?
Well, Option Pit, things are great. We're just out there trading, enjoying things. The Carmen Line, nicely, I was busy closing. I closed a lot of stuff this morning when we were on the lows, and now I'm in a position where I'm going to be able to maybe play with some things here. I'll tell you, I guess this is all from a Goldman note that came out saying, reallocate, and that's why you're seeing strength in financials, even as we're seeing some weakness, some softness in the financials. Apple's already made a decent recovery. Like I said, I think you got to. I think I'm gonna. I'll tell you, I wish it was my prospectus to be able to go balls long, FANG stocks, because I would do that for the overnight. But
I would pay money to read that prospectus. I will go balls long. Every big investor in the world would beat a path to your door, sir. Balls long, FANG stocks. There we go, listeners. That says it all right there. Check them out, Carmen Line, if you too want to go balls long, FANG stocks, as well as, of course, optionpit.com to take the masterclass out there for all things. I think it's still going on, so you can check it out over there. And on behalf of Mr. Meatball and Mr. Rose, who probably already is asleep, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, keep those questions coming. We'd love to hear from you guys. We'll see you next week for Vol Views, and if you're around live, we'll see you in about half an hour for all things TWIFO.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.